Hello everyone. Today let us discuss something about depreciation accounting. You assume that you are purchasing a machinery for rupees 10,000 today and using throughout the year, and at the end of the year, does the value remain same? No, the value decreases. Similarly, if you are purchasing a motor car today for rupees 10 lakh, you are not running it at all in the year, but at the end of the year, the value doesn't remain same. Here also the value decreases even though you are not using it. So, such a decrease in the value of an asset due to its usage or mere passage of time is called as depreciation. The term depreciation is derived from the Latin word depretium, wherein D represents decline and pretium means price. So, depreciation literally means that decrease in the value of an asset or price of the asset due to any cause. I will give the simple definition of depreciation which is given by R.N. Carter. According to him, depreciation is gradual and permanent decrease in the value of an asset from any cause. The cause may be usage of asset or mere efflux of time or any changes in the market conditions or technology, etc. So, the meaning of depreciation is the decrease, gradual, continuous and permanent decrease in the book value of the fixed assets due to one reason or another. In accounting, the term depreciation is used to refer that part of expired cost of the fixed assets that is allocated to that particular year is called as depreciation. Features of depreciation. First one, depreciation is charged on fixed assets. In the sense, depreciation is associated only with the fixed assets. Current assets are just valued but not depreciated, and fixed assets are depreciated but not valued. So, the depreciation is only associated with the fixed assets which are used in an enterprise. And the second one is, it is a decrease in book value of the fixed assets. It means any changes in the market value cannot be termed as depreciation or cannot have any impact on the depreciation amount. So, if you are purchasing the gold today at rupees 2,890 per gram, tomorrow the value may decrease to 2,880 per gram. Such a decrease in the market value of the gold cannot be termed as depreciation. It is decrease in the book value of the asset. In the sense, whenever we are purchasing the fixed assets, we are showing it at its purchase price or original cost at which you are purchasing in the books. And you are charging depreciation on the original cost of the asset, and it reduces that book value, and market value changes or fluctuations doesn't result in depreciation. Third one is, diminution is gradual, continuous and permanent. Gradual in the sense, as I told earlier, a sudden loss in the value of an asset cannot be termed as a depreciation. It should be gradual decrease from year to year. And it should be continuous in the sense, if you are charging depreciation in 1 year, that has to be charged on regular basis even in the succeeding period also. And it should be the permanent one. The value once decreased cannot increase further, or it is permanent. Suppose you are showing the furniture value at rupees 10,000 at its original cost, and you are charging depreciation at the end of first year at the rate of 10% and amounting to rupees 1,000, the book value reduces to rupees 9,000. And in the next year, the rupees 9,000 further decreases, in the sense that once decreased cannot be changed further. So, the change is or decrease is permanent one. The next feature is, the depreciation is non-cash expense. there is no cash outlay or outflow due to charging the depreciation on the fixed assets. The book value decreases, but there is no cash outflow. So it is a non-cash expense. The next one is allocation of expired cost. In the sense, depreciation is just allocation of expired cost of the fixed assets. It is not valuation of the fixed assets. If you are purchasing the machinery at rupees 20,000, then the cost of rupees 20,000 has to be allocated over the period of its useful life till its end of the useful life. So that the depreciation is allocation of expired cost. And the next feature is depreciation is must. Whether you are handling the assets carefully or it has been neglected, or if the asset is costlier one or it is cheaper, whatever it may be, you have to charge the depreciation on the fixed assets. And last feature is it is a revenue loss. In the sense, it is not a capital loss. Even though there is a deterioration in the value of fixed assets, the cost of fixed asset is capital expenditure, but the amount of depreciation charged is a revenue loss. In the sense, we are using the fixed assets over the period of its estimated life, so that each year the cost incurred for production will be charged to the profit and loss account, and it is termed as revenue loss to the books of accounts. So these are the features of depreciation. So in case of depreciation accounting, we have to focus on depreciable amount and residual value as well as useful life of the asset. The depreciable amount of a fixed asset, in the sense original cost of the asset minus scrap value or residual value, has to be allocated over the estimated or useful life of the assets. So that portion of the depreciable amount of the fixed asset which is charged in that particular year and which is debited to profit and loss account is called as depreciation in accounting. So we have to know something about depreciable assets as well as useful life. Let us know what is depreciable asset. Any asset which is used for more than one accounting period in an enterprise and which is having a limited life, in the sense it should not be a permanent one, and which is held for use in production or supply of goods and services for rental purpose, or which is used in administrative purpose of the enterprise, can be termed as depreciable assets. If you are purchasing the asset which are meant for resale in the ordinary course of action, then such an asset cannot be termed as depreciable asset. Then let us know the meaning of useful life. The period over which a depreciable asset is expected to be used in an enterprise, or the number of production of similar units expected to be obtained from the use of the asset by an enterprise, is called as useful life. So the useful life is predetermined by the legal and or contractual limits. In the sense, if you are taking the asset on lease for 10 years, then the useful life of that particular asset becomes 10 years. And the useful life is directly governed by the extraction or consumption, and useful life is dependent on the extent of use and physical deterioration on account of wear and tear. Again, it is depending upon the operational process in the organization, and the useful life is reduced by obsolescence. If there is any technological changes or changes in market conditions, it leads to reduction in the value, so that the useful life of the asset will also reduce due to obsolescence. And The determination of useful life is a matter of estimation. Normally, it is based on the experience with similar type of the assets. If there is any additions or extensions to the existing asset and such additions or extensions are of capital nature, then they have to be depreciated over the remaining life of the existing asset along with the value of existing asset. This is all about useful life of the asset, how to estimate the useful life. This is regarding the theoretical aspects of depreciation. Let us see something more about the same in next session. Thank you.